Hi guys, welcome to Shal Studies. Today we'll be discussing about the basics of accounting. So this video will be helpful for someone who is new to commerce or new to accountancy. So let's see a picture. What can you see in the picture? There are a lot of pebbles and stones and all, right? So can you identify which all types of pebbles are there, which all colors are there, or which is less or which is more? It's hard, right? So let's see another picture. In this picture, can you identify which all types are there, which all colors are there, or which is less or which is more? Yes, how? Because it's all separated and classified. From now, you have to think from the perspective of a businessman or a businesswoman. Now you are doing a business. A lot of activities are happening, a lot of transactions are being done, so it's all messed up in your head. As we said in the case of Pebbles, separating and classifying these transactions will help you understand what is actually happening in the business. So, in a simple way, we can say accounting is the process of recording, classifying, and summarizing these financial transactions so that it's understandable and helps in decision making. Now, let's see the definition of accounting. Accounting is the art of recording, classifying, and summarizing in a significant manner and in terms of money, transactions, and events which are in part at least of financial character and interpreting the results thereof. This definition is given by the American Institute of Certified Public Accountants AICPA. We must note that we are doing this in terms of money, for examples, rupees 1000, rupees 2000, etc. And the transaction should be in financial character, at least in part. After recording, classifying, and summarizing the data, we are interpreting the results and we are communicating the results to the users. And this is done for decision making. So, how can we make decisions? We have to see something, right? Or we have to have something. So, after recording, classifying, and summarizing, we are making financial statements. Have you seen a bank statement? We get the details of the bank account from the bank statement. In the same way, we get the details of the business from the financial statements. Two important such financial statements are balance sheet and profit and loss account. We'll discuss about it in detail in the coming videos. Now let's see how we will reach to the financial statements. The first three steps are journal, ledgers, and trial balance. As a first step, we need to get the source documents. A source document can be a voucher, a bill, or anything that act as an evidence of the transaction. As we have seen in the definition of accounting, the first thing to do is to record the transaction. The source documents will help us to do this, and this process is called journalizing. It is done through journal entries. Then we have to classify these entries. This is done with the help of ledger accounts. We classify the data into different heads. Each head will act as a ledger account. So there will be a number of ledger accounts. Then we'll go for trial balance. Trial balance helps us to summarize the ledger balances. So after creating the journal entries, ledgers and trial balance, we'll go for the financial statements, balance sheet and profit and loss account. A balance sheet shows the financial position of a company, whereas a profit and loss account summarizes the revenues, cost and expenses. So that was a quick introduction to accounting. We'll be discussing more about the basics of accounting in the coming videos. Thank you.